Hello students, Assalamu alaikum. So today we are going to continue our paper 32 of June 2022. Okay, so see, here's your paper. June 2022. This is the question paper. Now we have to come to inside. And uh, this is the second part. We have done question number 1. We have done question number 2. Now question number 3, ratio analysis. Inshallah. Okay, this is ratio analysis. Okay. Now, in this question, we have to, this is basically a very easy question, and you have to learn the formula. So let's start with the question. The directors of KPCLC provided the following information. Okay. Answer the following question in the question paper. Questions are printed here for reference only. Explain 2 ways in which accounting ratios may be used by potential investors to assess the performance of the business. Now, one thing. Accounting has a limitation, very big limitation. That is, it cannot provide you quality information. It can only provide you quantitative information, not qualitative information. So ratio analysis will help you to make a quality of information by comparing your results with your previous year, is comparing your results with your competitor. Okay. Now, so B part, we have to calculate the ratios, price earning ratio and so on. So here we are in the question paper. Okay, we did last time. Okay. B part, price earning ratio. Okay, so what is the formula of price earning ratio? We know that price earning ratio, PE, is equal to share price divided by earning per share. Okay. Now, in this question, first we have to calculate earning per share. So earning per share is equal to net income divided by issued share capital. Okay. Now, in this insert, see, profit for the year 114,000 and issued share capital is 600,000. So, earning per share, okay, earning per share is equal to 114,000 profit divided by 600,000 issued share capital, and that would be how much? That would be okay. So that would make 114,000 divided by 600,000, 0.19. 0. Earning per share 0.19. Now we can easily calculate PE. How we calculate PE? Share price. Share price is how much? $2.4. $2.4 divided by 0.19, and the answer would be 12.63. Okay. 2.4 divided by 0.19. 12.63. Done. This is okay. Now come to second, dividend yield. Okay, how to calculate dividend yield? Dividend yield. Dividend yield. Yield का formula. Dividend yield. Dividend per share divided by dividend per share divided by share price multiplied by 100 divided by share price and multiply by 100. So dividend per share is how much? Now, see what dividend they've announced. They've announced dividend 90,000 on 600,000 ordinary shares. So 90,000 divided by 6,000 ordinary shares, that is 0.15. Dividend per share 0.15 per share. Okay, so here 0.15 divided by price of share 2.4 multiplied by 100. So that would make divided by 2.15 divided by 2.4 percentage, 6.25%. Yes, is equal to 6.25% answer. Okay. After income gearing. Okay, what is the formula of income gearing? Interest divided by profit, income gearing is equal to interest interest divided by income divided by profit multiplied by 100. Multiplied by 100. Now, interest is how much? We have to calculate. Interest is 8% on debentures. So if we take out 1,50,000 multiplied by 8%, that would be 12,000. Okay. See, so 12,000 is the amount of interest, and earning before interest would be 114,000 was your profit plus 12,000 interest, that is 126,000 multiplied by 100. Okay, 12,000 divided by 126,000 multiplied by 100. Answer is 9.52%. This is income gearing. Okay, now gearing ratio. Gearing ratio is equal to long-term liabilities divided by long-term liabilities divided by total equities. Total equities. Okay, so if we come here, long-term liabilities is I think 150,000. Achha, what about total equities? When we go to here, we'll find total equities. See, ordinary share capital 600,000 plus retained earning 38,000. Okay, plus general reserve 75,000. Okay, plus revaluation reserve 80,000. Okay, plus profit for the year 114,000. Okay, plus dividend, sorry, minus dividend paid 90,000. So it means 90,000 plus 150,000, total like 967,000 is our total equities. 967,000. 967,000. Okay, multiply by 100. So the answer will be how much? 150,000 divided by 967,000, percentage 15.5118, so 15.51. 15.51%. Got it? Achha, return on capital employed. Return on capital employed, so return is how much? Return on capital employed. The last ratio, return on capital employed. Okay. Return on capital employed, return we have calculated now. Interest, earning before interest and tax. कहाँ गया? Okay. Where it is? Ah, कहाँ गया? Yeah. 126,000 profit before interest and tax. So earning, कहाँ जा रहा? So return on capital employed means return 126,000. Okay, ROCE, what we call it ROCE is equal to return on capital, return was return divided by capital employed. Capital employed 967,000 we calculated in our previous calculations. So that would be how much? Hello? Okay, so that would be how much? Multiply by 100. So that means 126,000 divided by 967,000, percentage 13.02%. Yes, 13.02%. Then this is a very easy question. Acha, directors are considering declaring a proposed dividend of 0.2 per due to low level of retained earnings. At December 31st, 2021, they asked the accountant whether dividend can be paid out of reserve. The dividends cannot be paid out from revaluation reserve. It can be paid out from general reserve only. Okay? Because general reserve is basically a calculated or deducted reserve, which we have deducted from income. Revaluation reserve is has not yet been realized actually. Getting my point clear? Okay. So we cannot pay off dividend from revaluation reserve because revaluation reserve has not yet been realized. Okay. Now the directors are thinking of investing $1,000 in a new project. The project will generate $24,000 profit before interest in 2022. They have two options to raise $100,000. Issue of new ordinary shares, issue of a further 8% debentures. Acha, in my opinion, as a business teacher, what I want to tell you, okay, in taking things from liability or taking financing from liability means two problems. One is redemption. And the second is interest. Okay, always remember. Now decision is yours. One day you have to pay off the liability anyhow. Okay? And you have to pay interest on liabilities. Now decision is yours. Okay, source 4. We have to go to source 4. This is now we are moving to insert. Okay, question number 4. Alan and Bobby were in partnership sharing profit and losses in the ratio of 3:2. Okay, Bobby reminds me one of my boss when I was teaching O levels somewhere in Karachi. Okay. That was a lady who was called Bobby by the kids there. So whenever I read the word Bobby, it makes me smile. It brings a smile on my face. Okay, the partnership statement of financial position 31st March 2022 were as follows. Okay. Now assets, liabilities, and everything is given. Where is the problem? Where we have to concentrate. A company, Limited, acquire Allen and Bobby's partnership business. This is purchase of business, or we called it absorption when a company, when a big company eats a partnership business. Okay. Now, the company acquired all the assets except the bank account and motor vehicle. Be careful. The motor vehicle was taken over by Allen at the value of 18,000. Okay. The partnership paid 45,000 in settlement of their trade papers. Okay. Now, the value of assets, they have revised the value of assets. Okay. In this question, we don't need to bother a lot because the total of all the values when they are changing the value of assets, land, building, equipment, motor, and inventory, trade receivable. Okay. Now what we have to do, see what they are taking the total value of assets, 730,000. Okay. The goodwill of the partnership was also agreed at 40,000. It means the total purchase consideration is $770,000. 730 for this value of assets, which they have revised. Okay. 40,000 for goodwill. So it means they are going to pay $770,000, the purchase consideration. And purchase consideration is settled not by cash, but shares. Okay. Which were split between Alan and Bobby equally. Okay. Prepare a statement showing the partner's share of profit or loss on realization. Okay. Now, when you are attempting this question, remember, don't need to bother a lot. Just see total value of assets they have 730. They have taken the assets. Okay. And 40,000 for the goodwill. Okay. Okay. So what we are going to write it over here. Purchase consideration. Okay. That is how much? 770,000. Value of assets 730,000 and 40,000 for the goodwill. Huh? Okay. See, this 40,000 for goodwill and 730,000 value of assets. Done. Okay. Now, value of assets actually in partnership. What is the value of assets in partnership? Other than bank and motor vehicles. Total assets we have 785,000 minus bank amount 52,000 minus motor vehicles 57,000. 676,000 is the total value of business here. 676. Done? Okay. Okay. Now, what we get here, okay, what we get here, 770 minus 676,000, answer is 94,000. Okay. This is the gain on realization? No, because the firm sustained loss on motor vehicle. Motor vehicle was taken up by 57,000. No, for 18,000 only. So loss on motor vehicle is equal to 57,000 minus 18,000. So the loss is how much? 57 minus 18. 39,000 is the loss. Done? Okay. Now 94 minus 39,000. We are left with 55,000. 55,000. Okay. Now discount on liabilities. Discount on trade paper. That was 1,000. 46,000 liabilities. Let me show you. See, 40, see, trade payables, 46,000, but we paid only 45,000. So 1,000 discount we availed, that discount is going to be added over here, 1,000. Okay, and we are left with total gain on realization, 56,000. This is our gain on realization. Gain on realization is 56,000. Okay, now if we divide the ratio between the partners, ratio was 3 into 2. Okay, so Alan would get 3 upon 5 multiplied by 56,000. So his share in the gain would be 56,000 multiplied by 3 divided by 5 is 33,600. 33,600. And Bobby share is 2 upon 5 multiplied by 56,000. 56,000 multiplied by 2 divided by 5, 22,400. Okay, this is done. Achha. Now we have to make partners capital account in columnar form to show the closing entries. Okay, so what we do, I'm giving it a heading over here. Okay, now okay, this is the debit side. Particulars. Alan debit side. Okay, then Bobby debit side. Okay. Now again particulars. Okay. Alan's credit side and Bobby's credit side. Bobby's credit side. Okay. Acha. Now capital accounts. Okay. Now opening balance, balance BD. Opening balance of capital is how much? Okay. Alan 400,000, Bobby 320,000. Here 400,000 and Bobby 320,000. Okay. Done. Okay. Now we have to close the current account because we are closing the business. Current account Alan is 6,000, but debit side because it's showing a negative sign. Bobby is 25,000 on the credit side. Okay. So current account Alan 6,000 and here current account Bobby 25,000 credit side. Okay. Done. Now realization, gain on realization. What's happening? Gain on realization. Alan 33,600 and Bobby 22,400. Okay. Okay. Shares in we received and we divided. Achha, how much shares we have received? See, 770,000. The value of shares 770,000. So it's going to be divided among partners. 770,000 divided by 2. 385,000 each will get shares in So they get 385,000 and 385,000. Done. Now one thing, very important, is do we have, now we have left with cash. Okay, we are only left with cash. Now there is a checkpoint. We can check it here. We can check it on the other side also. And I will teach you how to check whether you have done it correctly or not. See. Now, if we take the totals here. And here. What will happen? See, just check. His balance, Alan, 400,000 capital, plus 33,600 for gain on realization. His current account was showing 6,000 negative, so it's gone. Now, and he is given 385,000 for shares. Now we have to pay him 400,000 plus 33,600. Okay. Minus 6,000 minus 385,000. Okay. What I forgot, motor vehicle, yeah. Motor vehicle. Alan has got motor vehicle 18,000. Okay. Now 400,000 plus 33,600 minus 6,000 gone for current account minus 385. He has given shares minus 18,000 for the motor vehicle. Now he has to be paid 24,600 from bank. He will take away from bank 24,000. He will take away from bank. Okay, the cash. Achha. What about Bobby? Bobby has shown 320,000 capital plus 25,000 current account. He got it plus 22,400 for realization minus 385,000. He is short of 70,600. He is still short of. So he has to pay to the firm 17,600. Okay. Getting my point clear? Achha, now check. इसको double check करते हैं. Let's double check. The firm had 52,000 in bank minus 45,000 for the liabilities. We are left with 7,000. Plus they have to pay to okay. Now they are left with only 7,000. Now they have to pay 24,600 to Alan. So 7,000 minus 24,600 is 17,600. Bank amount is short. It means our current account is correct. Perfect. Here we check. Okay. Now see the totals. How much is the total of both the sides? 436,000. This is 436,000. This is 385,000. Getting my point clear? We are done with this. Okay. Okay, kids. Now move to the next part. Oh, prepare journal entries in the books of books to record the acquisition of partnership business. What we have to do? We have to make a journal. date. Okay, some people here write name of account or particulars. Okay. Debit. Okay. Credit. Okay. What we have to do, we have to debit all the assets over here with the agreed values. This one. Okay. Now, goodwill. We have to write here debit 40,000. Okay. Land and building 410,000. Land and building 410,000. Okay. Then equipment 132,000. Equipment 132,000. Okay. Then motor vehicles 30,000. Okay. Then inventory 70,000 and trade receivable 88,000. Inventory 70 and 88. 70,000 and trade receivables 88,000. Okay, debit. Okay, now what we have to create? Share capital. Share capital. So we have purchased that 770,000 worth of business divided by 1.4 value share. It means 550,000 shares of $1 each. So 550,000 is our share capital. And the difference is share premium. $220,000. Got it? This is how we have to make it. Define the term intangible assets. Assets which do not have physical existence are intangible assets. Done? Okay. Discuss why the purchase consideration more than the purchase consideration was more than 30,000 for just the reason it was the goodwill of the business. Or advise director whether they should pay for the partnership more than 730,000. So if the business has a goodwill or it's an old business, so buying that business, we can earn through the reputation of the partnership business, which is the goodwill. Okay. So that's the theoretical answer. Finish? Okay. Question number 5 and 6 we will do inshallah tomorrow.